and welcome to KaleidoCAST. In this episode, we will be looking into investing in venture capital funds. So if you're curious about what it entails to invest in a venture capital fund, what the benefits are, or what you should be mindful of with this type of investment, well, then this episode is really for you, because with me in the studio today, I have an expert on this topic. Here is Andreas Iten. He is the CEO of Tenity, which is a venture capital firm. And as my understanding, you're also the co-founder of Tenity. Is that correct?
That's correct, yes.
And you wear multiple hats. When I read your LinkedIn profile, I saw that you describe yourself as a VC investor, a fintech expert, an out-of-the-box thinker, innovator, your board member, and founder. So thank you so much for being here today. Truly the expert that we need here today.
Thanks very much. It's a pleasure to be here, and I'm looking very much for the conversation.
Yeah, thank you.
Thank you.
So before we dive into actually investing into venture capital funds, could you explain to me what is a venture capital firm and what sort of role do you then play in the business ecosystem?
So a venture capital firm is an investment firm which invests into early stage startups with high growth potential. And normally the investment firm or venture capital firm does more than just providing capital. It provides expertise, it provides the network, to make these companies successful. Very often venture capital firms play a crucial role in the ecosystem to foster innovation in a certain industry because they invest in the latest innovation.
Yeah. So you then invest into startups that you really believe in. What do you then look for in order to identify and engage and select these startups that you work with? Because we've all heard these dark numbers about how difficult it is for a startup to succeed.
Okay, so a VC looks at many companies, obviously, and tries to select those where, the potential for growth is the biggest. So the growth means also, that you can create a decent return or good high potential return on investment. So you look at several different aspects. You look at the market, you look at the team, you look at the at the problem they solve. And, out of many opportunities, you select those where you believe you can be successful and you do the investment.
And in return, you get equity in the company.
Absolutely. That's the idea.
And where does this money to invest into these startups, where do they come from?
There are several organizations who provide capital to VC firms. And there can be institutional investors such as pension funds, for instance. There can be corporates who invest into venture capital just to get access to more strategic innovation opportunities. There can be family offices to diversify their investment portfolio with a new asset class, or it can be qualified investors, so individual investors who invest into VC.
Okay, so could also be a person that chooses to invest into a venture capital fund. If you are an accredited investor, yes. What does that entail?
Yes, you need to be a so-called qualified investor or accredited investor. That means you have to fulfill certain criteria. This is a regulation. It's given by the regulator, and the VC firm is actually obliged to check if the person actually fulfills these criteria. If that's okay, then you can become kind of part of the limited partnership, which is usually, the group of, investors who provide capital to a VC fund.
Okay. So if one is an accredited investor and wants to get into investing in a VC fund, what would that process look like? Could you take us through from the beginning until the end of the investment process?
Yes, absolutely. So the first step is basically to get to know the people which are behind a VC fund. So you want to know who is doing the investments. So that can be the partners, that can be the investment professionals you have. You need to meet them, you need to understand, where they're coming from. So you need to do your basic due diligence on that. Then obviously what you need to understand is also, what their investment thesis is. So why they invest in certain areas, what they believe, where they see the potential. They obviously would have a strategy how they invest, to also look at that. So you basically learn, about the people behind and the strategy and the investment thesis. Then later on, obviously need to go through the onboarding process, which is a very similar to if you would actually sign up at the bank. So this is kind of those checkpoints. And later on, you sign a contract where you basically commit a certain amount of capital, which will be called over time. And then you become part of this limited partnership.
It sounds like that from the very beginning of this investment to the end, it takes quite some time.
It's a long-term investment you do when you invest into venture capital, usually like 10 years plus, because those companies, they need time to actually mature and grow. So that means the VC invests builds up the portfolio in a time period of 4 to 5 years, and then starts to manage the portfolio and eventually divests to create the exit proceeds. That means it's a 10 years really long-term investment. Yeah. And it's also illiquid. That means over the 10 years, don't expect any kind of exit proceeds, because the fund will be liquidated after 10 years and you get the money back. Yeah.
And if it goes well, then it's a profitable investment. Then.
Yeah, that's the idea.
Yeah. Okay, so if one chooses to do this and to invest into a VC fund, then I have a lingering question about this. Because why wouldn't I just then be an angel investor and then specifically decide on some companies that I want to invest in?
Absolutely, good question. So I think angel investing is a very exciting space, but it's heavy lifting. So you need to do everything on your own. So you need to identify the deals. You need to actually do the due diligence on every single deal. Then obviously need to negotiate with these companies, the terms and so on, conduct the investments, very technical, right? And then later on, it's also expected that you probably work very close with these companies and support them. So that's the angel investor part, which I think is very, very exciting. I know angel clubs can definitely help. Here in Switzerland, you have, for instance, SIGTIC, who can help you with that. So they also provide some education infrastructure. Maybe in comparison, if you invest as an individual into a VC fund, you don't have to do the heavy lifting. You basically, kind of hand over the whole, screening, scouting, investment management to the VC firm, but you still get involved. If a state-of-the-art VC company involves you as an investor with the companies, it's not just sending out reports. It's actually also, expose you and connect you with these portfolio companies. And even, if you have some expertise in a certain field, I think it's highly welcome that you can actually also support these companies during the whole journey of, growing.
So basically, it's more diversified, so a little less risk and not that much work. And you still get to have a little bit of fun. And
that's very well summarized, because I forgot to mention that, if you're an angel investor, you also probably need to build up a portfolio with a certain size, because if you just do 1 or 2 investments and, 80% of startups fail, so it's a very risky thing. So if you invest in the fund, which usually does, multiple investments, bigger portfolio, then, the risk is much more diversified, which also means, more work, but you don't have to do it because you are, directly involved in, doing all these investments.
It sounds like a very exciting way to invest some money. Do you have 3 tips for somebody who is curious about getting into investing in a venture capital fund?
Yes, 3 things. So first of all, I think get to know the people behind the fund. It's not a financial product, so it's people behind. So you need to understand a bit, what's their background, do the due diligence on these people. Check the track record. Can you trust them? Is there, also a good chemistry between, you as an investor and them? Because they will do all the work for you. And eventually create a return for you. So that's first thing. The second thing is ask yourself, why do you want to invest into VC? Is it just because you want to create a financial return? Or is it, even maybe more that you want to, learn from, a certain innovation in the industry, or, want to be maybe close to these companies? So is it also a kind of an emotional thing that you want to be involved? Do you understand, maybe also what's going on? Because in the meantime, this is the third tip. I mean, a lot of VC funds are actually specialized on a certain industry. And I personally believe this expertise is very important, because if you want to do good investments and, if you really want to be successful, you need to understand, a specific topic, technology or business models and so on. That's why I also think it's wise to look at, different kind of, industries and look who is really specialized and go with them.
Yeah. So 3 great tips from you there. And on that note, I would like to say that we here at Kaleido Private Bank, we are very proud to have a partnership with Tenity. So for our clients who are interested in getting into this type of investment, I have included a link in the description below this video, so you can check that out and contact us regarding that matter. And also in the description below this video, I've added a link to our blog post on this very topic. In case you didn't get enough from this conversation, you can read more about investing into venture capital funds in that very blog post. And with that, I would like to say thank you so much to Andreas Iten for being here with us today and sharing his expertise. Thank you.
Thank you very much for having me today.
I hope you enjoyed our conversation, and see you next time on KaleidoCAST.